All right, folks, big news. Debt just got cheaper today. Out here hunting elk in Utah, but had to come on for this news. I reached out a couple weeks back and talked about the Federal Reserve getting together yesterday and today to talk about whether they were going to reduce interest rates. Well, they did. The Federal Reserve rate was dropped by 1/4 point. It went from 4.25 to 4.50 down to 4 to 4.25. So what does that mean? What is that? Well, that rate is what the banks use to determine what they're going to charge each other when they borrow money. And so that rate that they use, it's called the effective rate, but it's based off of the Federal Reserve rate. So before, the Federal Reserve rate was 4.25 to 4.5. The effective rate was around 4.33% is what lenders use to borrow from each other. Now, that effective rate will probably go down to about 4.12%. So what's that mean to you? Well, it means that debt just got cheaper. If you are getting a commercial loan, your interest rate is going to be less because banks are charging each other less. If you're getting an auto loan, that loan is going to be cheaper for you. If you have credit cards, the interest rate on your credit cards is going to go down. If you're doing a commercial loan and you're in real estate, the loan cost is going to get cheaper. Now, that can have a really good impact on the economy. Consumer spending can increase because they've got more money in their pocket. They can borrow more money. Valuations in real estate can go up because people can get cheaper debt, which means they can get more debt, which means they have more money to spend. And when they have more money to spend, sellers usually increase their pricing. It can be a really good thing. However, you want to be careful. There's a reason why they reduced the rates. They reduced them because they're concerned about the labor market. Unemployment is at just north of 4%. It's the highest it's been in 4 years. So they're concerned about demand. If you flip over to real estate, demand is down 10%. Over on the retail side, it's down 16%. However, it's cyclical. There's certain areas within real estate that still have positives, like logistic companies. That activity is up 12%. Build-to-suit activity is up 16%. Leasing activity over on the industrial side is up 4% from last year. So these are all numbers that you want to pay attention to. If you're in the real estate space or if you're in any kind of business, you want to follow this stuff because it can have a direct impact on you. It can have a direct impact on the economy, and you have to keep an eye out to see how this all plays out. One other important point, they get together, the committee, the Federal Reserve Committee, 8 times a year. So they have 2 more meetings, October and December. People a lot smarter than me are predicting that they're going to drop rates by 1/4 point for each meeting. So that's going to be 1/2 point, which means rates could be sub 4 by the end of the year. So if you're thinking about that new car, if you're thinking about refinancing that business loan, if you're thinking about selling your commercial property, you might wait to see how things pan out over the next couple months because rates could even go cheaper. Pay attention, it matters.